Hello, everybody, and thanks for being here. This is Harry Boxer from the Technical Trader. How are you? And I wanted to just give you a 2-minute take on what I'm all about, how long I've been in this business, what I do. I'm a technical analyst. I wrote a book on technical trading called Profitable Day in Swing Trading back in 2015. It's written in layman's terms so you can really understand my philosophies and my theories about trading, particularly day trading, and how to use 1-minute intraday charts bar charts to enhance your trading skills. Here's a quick look at my website. 1 second. David, I might have been able to bring this over. I'm not sure if I'll have to share the screen to do that, I guess. So
Yeah, I think, yeah, you probably have to reshare the screen.
where do I go to do that? Let's see.
Oh, here, I can manually turn it off for you, and then it's easier to find the button.
Okay.
You should be able to share it again then.
1 second. I'm actually not seeing where I can share because I think it got covered up.
Yeah, you just have to find the Zoom window again.
Oh, there it is. I have to launch a meeting again?
No, but in your taskbar,
It is not, unfortunately. Oh, wait a minute.
there should be Zooms somewhere on one of the screens.
You know what? I'm just going to move on.
Oh,
I'd like to be able to. Yeah, go ahead.
maybe well, I can share it for you, or
Yeah, go ahead. Sloppy start. Apologies, everybody. There we go. Okay.
will that work?
Yeah. So that's me. The techtrader.com is a website and one of the first trading rooms in history on the internet. Back in 2001, we started, and it's now going on our 24th year. With several hundred people online with me every day, giving them advice on what to buy, what to sell, and it's only technical. I'm a technical analyst, and I follow price patterns, underlying technicals, etc. If you go to the site, you can click on start a free trial, and for 10 days you can come in and see what we do. It's pretty fun place to be. There's the free trial. Just put your name at no phone, by the way, no credit card. Just put your name, last name, and fill this information out, and you're in for a couple of weeks. And I think you'll enjoy what you see, and you get a feel for my style as well. So that's it for now. But I do want to start this session with talking about symbols for everybody. So let's do that.
Okay, you should be able to share your charts again now.
There you go. Okay, so we got some symbols already. And Robert says, what about HAE? Now, here's my take on Haemonetics. Well, first of all, you always look at a long-term pattern, go back several years and see what the chart looks like. And when I draw lines that indicate highs, lows, potential overhead resistance, and support underneath. The problem with Haemonetics, in my opinion, is that it's been going sideways for a couple of years, so it's really not a viable pattern for me. Also, the current action is underneath the moving averages. If the stock's in an uptrend, it should be looking like this, in a rising pattern, with moving averages moving in that same direction. But once they cross over and come down and the stock forms a pattern like this underneath, this is more of a short than a long for me. Robert, I'd be really careful with this one. And if and only if the stock makes a move above here, would I be interested. I would much rather wait, and I tell this to all my subscribers, you're better off waiting for a stock to break over and break out and pay up for a stock and know that it's in an uptrend than be sitting with a stock waiting for it to break out or watching it drift down and drift lower. My take, when a stock's in a downtrend, which just appears to be, this is a 1, 2, and 3 is coming, and maybe 4 and 5. Eventually, it could be a $70 stock if we get a summer pullback or any kind of market pullback. Until and if this stock gets above 89 with energy, with volume, I would sit on the sidelines and wait for it. Up next is Boyle, one of my favorite stocks. I kid you not. It's a really good trading vehicle. This is an exchange traded fund for natural gas. Now, we made a fortune with this back in here when the stock was, this is, by the way, this has been one of the problems with these kind of ETFs is they reverse split a lot. There wasn't a $3,000 stock. As a matter of fact, it wasn't even 300. This is like a massive reverse split. It's done it a couple of times. But for example, here, oil has a 1, 2, 3, 4, 5. 5 waves down in basic LA wave terms constitutes a longer term move. When stock basis breaks out, and this day it broke out right here, is where I put a swing on it. Because the moving average has already crossed over. When the stock comes down for a long-term trend or intermediate trend, the moving averages cross over like it did right there, and it consolidates above that level. That's an ideal pattern. I put a swing on it at 14.75. The stock went to 24.72, almost a full 10 points, and it did it in less than 2 weeks for a nice swing trade. I got everybody out on the reversal day because it hit my target at 24.5. Matter of fact, it was just a tad above the target, and it came down hard to test the breakout point and 50-day moving average and reversed. Now it's pulling back again. Obvious support is in the 16 to 17 zone. I don't want it below that. If you buy it, I'd rather see it come down a little bit further and wait for an entry opportunity towards 17. Overall, I think it's reversed, and the measured move here can be added on here for a move that takes us, I think, to 27, 32, and higher high 30s eventually. But don't anticipate that. Wait for the breakout. DQ. Well, I believe Deco New Energy is a Chinese semiconductor. And as you know, there's a lot of legislation and tariffs going on with semiconductors of Chinese and American. So this has had one ugly chart. Now, we made a fortune trading this stock over the last few years on the long side. First here when it popped out and here when it broke out. If on a long-term basis, you can see this is stock that, believe it or not, exploded in 2021. It got up to 130. From 130 over the next 3 years, it's dropped all the way back to 17. Now, is it a buy or a sell? That's what you want to know, right? Well, for me, the stock is a nothing, meaning if you're not in it, I wouldn't buy it. The reason I wouldn't buy it, even though it's testing support here, is that there's no way that you know that this is going to hold that low. On a long-term basis, there's your chart. If it breaks this pattern, it's going to have 13, 14. I kid you not. I only go long this stock if I see it over the 50-day moving average for starters, and that's going to take a move over 20, and then 21.75. The big resistance is 23.75, so that would be a target zone if it's going to make a move. But overall, nothing special about this stock. I'm just not excited about it. LPLA, an expensive stock. Nice chart. I always take a long-term look at a stock like this and see where it's at in a long-term trend. And what I have here, it looks like, is a beautiful long-term rising channel pattern and up against key overhead resistance here, but maybe it just made a nominal new high. So yeah, this is a good one. Am I excited about a stock like this? No, I don't. I think it moves, and it's a low beta type holding, but it definitely had a nice move. If you're asking me where I think that the target would be, it would be about 350. So is there anybody else out there who has a question? David, I'm not seeing any other symbols. Is that true or am I wrong? Folks, if you'd like me to take a look at any stock that you own and give you my read, please post it. There's Adobe. Adobe's on my tech trader. Was here. Okay, let me show you something. This Adobe double topped up here, triple top, rolled over, formed the bear flag. We went short. When this stock failed to get to the moving average and started to roll over, it got hammered, and then it formed a wedge and it came down lower. So this is on my tech trader swing short list from over 500. It eventually went down to 433 and bounced. On big news, it broke out. Today it pulled back. My take on Adobe is simply this. Your support is about 496 to 500. Today's low, 505. The snapback of 13 points on Adobe today, as you can see from this low, was a good one, but this is nothing special right now. Although I do like anytime a stock has a 1, 2, 3, 4, 5 wave decline. Yeah, this is 4, this is 5. It's always good to cover it and maybe go long. The place to have gone long was the breakaway gap, but the pullback now may afford you an opportunity to wait for a consolidation and a setup for next level. If you want to know what the next target would be 570 to 580 in that zone. Do I like it? Not particularly. It's based on today's action and yesterday's breakaway gap. I'd say it looks fine. EXTR. Now, this is an interesting chart too. Extreme Networks was in phenomenal rising channel for a long time, for 3-4 years. In the 2020 low, when all the stocks got whacked, this was under $2. And by 2023, it was over 30, in the low 30s. But take a look at this pattern, breaking right there, a massive topping type pattern, and a large decline. 1, 2, 3, 4, 5 waves down. Now a rounding base pattern is formed. Let's scroll in a bit. Okay, well, the resistance from last week's high at 12.5 is what we need to get through. But this is more important, 12.94. If you get to 13, the stock should test the gap. That gap is 14.30 right there. Anytime a stock has a long-term downtrend and seems to create a rounding bottom and is breaking out above resistance, but the only thing missing on this is really good volume. So despite the fact that I like this kind of a flat head and shoulders inverse around here, it has apparently started or is attempting to start a new uptrend. So does it look good? It looks okay, but it's got to burst through 13 with volume for me to be more excited about it. And then my target is going to be a test of the gap at 14.25, and then potentially a run up to 15.75 to 16.5, where 16.5 fills the gap. I find that stocks, when they have big gaps, often will fill halfway into the gap, and halfway into the gap appears to be around there. So let's say 14.5 would be my target going forward on this one. Curtis Wright, that's CW. Beautiful long-term chart, not a cheap stock. All-time high territory. You betcha it's extended long-term. On the other hand, let's look at the daily chart. On the other hand, it has not broken its long-term uptrend. This is what I'm seeing. And it's a beauty. As a matter of fact, this came right off of it today. For me, I would put a tight stop on half my position under 260.63. Half. The rest under here, under 245.46. I always want to keep in mind where support might be from prior lows. So you can stop half under the trend line. Notice it's right on the moving average too. You don't want this going any lower. As a matter of fact, what it should do is, if it's going to extend, maybe a run up into the 300 range would be next. This one looks good. So keep that one in mind. For Tom Phillips, hey Tommy, BEAM. Nothing special here. Look, the stock had a great breakout here and ran from 30 and change and spiked into the high 40s. Great short-term trade. But boy, did it ever get whacked from 49 back to 21 or so. Cut in half. More than that. My question to you is, when you see a stock come down and then do this, are you looking, do you think that's a base, or do you think it's a bearish consolidation? My take is this is not bullish, especially with this week's action. Now, it was a one-day breakout that reversed and almost formed an island reversal. So for me, I think the stock might go lower. You got to be awfully careful with this one. I do not want this stock under 22. That's where I'd stop it. Now, there's a possibility it goes down from 22 down to 20 and change and reverses by retesting the low successfully, but I would not chance that. Next is ADUS. That's a pretty good looking chart. medical care. What I do like about it is that it's been a long time consolidating in that zone. With, we can actually call it a coil because the bottoms are rising, the tops are, falling. It just broke out. What we got to deal with now is this mini double top at 127. So you got 10 points to go to get to that level. And then on a longer term basis, this is a massive 1, 2, 3, 4. So long-term timing tells me the following. That if this does what I think it might, we're looking at 260, 65. Or double from here, long term. What I do like about the short term is this pattern. Rising channel, kind of a 45-degree angle, a breakout, and this is important. Price volume surge, really meaning a combination of price and volume across here, key. Short term extended, you might get a retest. Support right now, 105, 107 in here. I wouldn't want it underneath that. That could break the pattern. But quite promising, long term especially. And Deckers, apparently Robert likes expensive stocks. Here's what I'm seeing on Deckers. Another beautiful long-term move. The rising channel. Pay attention, folks. From 2016, that's 9 years or 8 years. 1, 2, 3, 4, 5. The fifth wave can be really explosive. So there's a possibility that if this continues, we may see 400 more points up to 1,500 plus. On a short-term basis, on a daily chart, it's pulling back to test the gap that it created here. I would have to say support is in this zone between 990, 95, and 960, 65. What I want to see, if you're long the stock, what you want to see is that this becomes an orderly pullback falling wedge and it doesn't break down, but rather it breaks back out above 1,050 and runs up to retest the highs or higher. It's a nice looking long-term chart. I would be careful about the short-term breaking down underneath 994.5, because then you got a gap in there that could come all the way down to 925.30. Long-term though, no question, terrific looking long-term chart. And it is going through a consolidation or pullback retest phase. OLED, that's a good one. I know this company very well. One of my old, dear old friends who passed away was its manager, senior director of a major brokerage firm that took this company public years ago. Okay, so in basic technical analysis, stocks in the downtrend until it breaks out, right? This broke out and there's a new rising uptrend. So what am I going to say? It's still in an uptrend until it breaks down. Now, where's the target? I would say somewhere up in that 240 and then 265 range, 262. So 240 and 262 potential. If it moves on a vertical, it's more like 228.30. But it does look good. However, maybe short-term extended. 148 to 206 in the last month, 5 weeks. That puts it in a precarious position for a pullback consolidation. This could be a 1, 2, 3, and if it is, wave 4 may need to develop before wave 5 moves you into 225 to 35 range. Next is MTH, Meritage Homes. I would be careful on all home builders. I'm starting to see cracks in the armor. That's all I want to say. Especially one like that is not a major, meaning obviously it's not a Lennar, a DHI, or any of the other major home builders, but it's probably pretty big for it to be that high. What I would do is stop it right there. You have a prior high and a couple lows in that range. So if this gets underneath 150, 149, 149, we get me to stop it out. Where does it go? Targeting 195. Up next is MMSI. Nice uptrend. Longer term. Looking for resistance up here. It's just above where we are, but my target's 94.5. On this kind of a pattern, I'm setting my stops. If you're a trader, everything depends on what kind of position this is. If it's a short-term trade, out underneath 80, and it's right there. Or give yourself some leeway and stop under 78 with a 50-day moving average. Either way, it's okay. It's not great. The underlying technicals just don't wow me. Longer term, it looks pretty good. And the target, as I said, 94.5. That looks like it. I'm not seeing a lot of other symbols if I missed something. Folks, if you have any questions on any stock, go ahead and post your symbols right now, and I'll give you my rundown. Wire. Encore Wire. Well, this is a good long-term chart, isn't it? Let's take a look at a long term. I remember when this stock was a $3, $4 stock. Yep. $4 a share back in 01. It's a long time. As recently as 20 when it got whacked down at 37. This is what I'm seeing now, an Encore Wire. A beautiful rising channel. But narrowing tops to create a long-term rising wedge. Now, what's really good about, is this a takeover? It acts like it has been acquired or something. I can't tell, but based on the narrowness of the stock, it looks like a stock that gapped up on a takeover and just trading until the deal's done. I don't know that for sure, but we'll see. Anyway, this is if that's not the case, and this is a simply gorgeous rising channel, then this stock breaks out of this flag, we're probably headed for 3.25, 3.5, and 3 3/4, meaning 325, 350, and 375. Wow, this is a gorgeous chart. That's what I've seen today. Cubic. I think that's what it is. Nope, Cube Smart. Now, this is a good chart too. Why is it a good chart? Well, first of all, it had a nice move. Came down in a 1, 2, 3, 4, 5. It tried to rally, but made a lower low. In essence, though, what we have here is the left shoulder, head, right shoulder, inverse head and shoulder pattern. The underlying technicals look pretty good. The shoulder line, this is something I talk about, most people don't. I think it's just as important that the shoulder line becomes a support level when it's an inverse head and shoulders. So for me, stop under 39.5 3/4. Target resistance there, 48.9. If you get to 48 3/4, the target's mid-50s to retest that high. This is a good looking chart. I like it. Or you can call it a cup and handle too. Whatever, the different vernacular for the pattern, but the truth is it's bullish. Amcor. Now, Amcor has a not too dissimilar pattern from what we just looked at, but a little bit different. The left shoulder, head, right shoulder, no, it's more of a V-bottom reversal bar with a right-hand extension. That's what I call it, or a cup and handle. The problem is this. You go way back here, and you draw a line across these highs, and you have the top of a long-term channel. Isn't that interesting? Now, it did go through key resistance here, which could propel it into the mid to high 50s or even low to mid 60s. So this is something to watch carefully, because if it pops a recent high at 37, 42, and 47 are your next targets. I like this look. That's for, let's see, Great Lakes. Tom Phillips wants to know about IONQ. Well, Tom, I love this stock when it broke out here. And this is a tech trader swing. It ran up and flagged, it popped and formed a mini wedge and exploded, double topped and rolled over. We met all of my targets, which were 11 and 17. Fell short of my $21 target, or did it? Nope, it hit 21.60. So it met all 3 of my targets and then rolled over. Now, what to do about it now? There's your downtrend. something like that. If this stock had held here, in other words, it would have created a V bottom with a platform, but instead it's rolling back and retesting the lows. But in a downtrend, it's dangerous when you're retesting lows because there's nothing holding it back. I see no energy to the upside, and I'm worried about the stock now breaking down under 7, where this stock could fall up to 6 pretty quickly. Don't know what's wrong with this stock, but it's a bear trend. I wouldn't touch it with a 10-foot pole until it broke back out again. And that's my take, Thomas. And John P. wants to know about Micron. Semiconductors, boom chakalaka, right, folks? Look at this move, even today. Stock started out with a dip like most semiconductors, but look at a rally back. 142 and change, 148 and change for 6 points, and then a flag or coil. Long-term chart, it's special. I have a measured move at 155, 54. Above that, the long-term chart says, I recently told my subscribers the same thing. I'm looking at 175. 175 from Micron. Where would I stop it? Under 138. 10 points, long way down. First stop is 144, then 138. As long as this angle is intact, you can stick with it. If it breaks down under this line, under this last pullback low, 142, and takes out the 50-day moving average at 140.5. So that's where I stop it under 140, roughly, right there. But projection is 155 and higher. XBI. Biotech exchange traded fund. I don't like I'm a big biotech fan, but I speak the truth about what I see. Biotech ran into resistance and rolled over, and while the market was rallying, has come down, indicating group weakness. But I'm a big believer in individual stocks, not in the indices. However, you're on the trend line. If you break here, you're looking at 87. You get below 87, put a fork in it. Resistance is 95.6. You get through that, you're looking at 100, thereabout. That's my take on that. Now, HUT, a crypto-related stock, excuse me, is in a beautiful pattern. It's a nice base pattern. I talked to my subscribers today about this. I almost put out a day trade on it because it popped out of this flag across that level. And here's what it looked like on 1 minute chart intraday. I was talking about once it broke through this triple top area, it extended from 1187 to nearly 13. No, not quite. 1187 to 1229, my bad. But still, it closed near the upper end of the range and high for the day. Overall, interesting long base pattern that goes back a couple of years. If it ever gets above the low 20s, it can rock into the, like it did up here. But I believe this might be a reverse split. I think it was. So, yeah, because these lines usually indicate they were in a different place. So bottom line is, I like the pattern. And today's close is the highest close on it since January. A new 6-month high thereabout. So my target now is 13.75 and then 17.5. Does anybody else have a symbol they'd like me to look at? I think I covered so far all the symbols given to me. Let's go over some things that we, AMWD, sure, I like that too. Hey, wait a minute, I believe that was a tech trader swing short. Yeah. Folks, when I see a rounding top, double top, rounding top, head and short, whatever you want to call it, the neckline breaks and it forms a little bear flag. I put a swing short on this. I think it was in the high 80s. And it made it down today to 79.69, so about 10 points. There's no reason to believe that today's action is anything but just a technical bounce. It did it 3 days ago. It bounced there for 1 day, it bounced there for a day and a half, another day. I never try to pick bottoms. Catching a falling knife will cut your hands. It just isn't suggest. I do not suggest ever buying something because you think it's cheap or because It recently was just, oh, it was just 96. It's down to 81. I think I'll buy it. Or what's prevent this from going to 77 or even 70? That's what I'm looking for in the stock. Now it might bounce if you can catch a little swing on it, but you got to be careful on anything that has a pattern like that. In addition, I want to point out to you that the trend line is broken. See it? This is where I put a swing short on it. When I see trend line breaks, I see topping patterns, I just go short. Target 66. It's 81 now. 15 points I'm looking for, folks. First stop would be this gap, 76. So 76 and 66 are my targets. Palantir, good day today for that one. I follow this closely. It's a tech trader's swing. We first got involved when this inverse head and shoulders formed and it broke out. And it went from 10 into the high 20s. Almost tripled. And it came down. You can notice 1, 2, 3, 4 times and held there 28 and a half. And now it's moving back up again. There's key resistance just above here. Get it to 25, 35, 50. 25, 35, 50 zone. And you may quickly see 27 and a half and low 30s, 32. The top of the channel says $32 is my target. On a swing, if it gets above, as I said, 27. Good chart though. I like it. Zscaler, ZS. I like this chart, and here's why. Well, first of all, it was pretty ugly when it broke down, it snapped back, filled the gap, and then rolled over. But eventually, 1, 2, and then the 3, 4, 5, I believe I would call it. Inverse head and shoulders, or V bottom. Look at this island reversal nearly, not quite. Big spike up to resistance and pull back to retest, and then a steady run of 7 days in a row up before the recent pullback. As long as it holds 175, that's my stopping point because of the moving averages and VWAP. That's my line in the sand. I don't want it to break there. What I'm looking for eventually is a retest of this. 200. My near-term target is 200 to 202, followed by 215.17. Those are my targets. You know where your stop is. Gaming stock pen. Hello, Charles. Folks, go to thetechtrader.com and log in for free for 2 weeks and enjoy them and make some money. I like to see somebody over there. Okay. Pen. This is a nice chart, even though it's ugly long term. Why I say it's nice? Well, the declining top lines, moving averages, all of them appear to be broken. It then retested and moved back up to test this line here, where there's some resistance. The next target is a test of the gap near 19. Sorry, I tested the gap at 20 and a half, and then at 23. So 20 and a half and 23 are my targets. I would be careful. I don't want it under 1690 ideally, okay? In this market, it's, I'm concerned about the market itself. So I think summer months, perfect seasonal timing for a market to pull back. But it's an election year, so a lot of cross currents. Anybody else with a question for me at this point? Any symbol that anybody wants to take a look at? And if I missed your question or I missed a symbol, please repost it. So Tom wants to know about AFMD. Yeah, I think I put a swing on this. I'm not sure. I have to remember. But here's the bottom line. Exploded literally from 382 to 882 in a couple days, breaking through a triple top, but pulling back and then bouncing. That bounce created a double top. And now it's pulled back again. Difficult call. But you have to look at the overall pattern. This is a reverse split stock too. But it went through a triple top and backed off. I think the key to this one is two things. It spent several days holding 6. There are moving averages at 5.5. Those are your 2 levels of support and where you want to stop. Half there and half there. We don't want to see the stock back to 3 or 4, do we? So to prevent bigger losses, always have a stop in mind. Never trade without stops. First stop's under 6, second stop's under 5.5. If we can get up through 730 short term with volume, I would look for a test of 8 3/4, and then maybe we can get to 11. Do I like it? Overall, it's promising. So ETHE, we all like crypto. I like crypto stocks. I don't like cryptocurrencies. That's just me. So easy breakout here, an explosive move with a double top. And now pullback, what I would consider a bull wedge. See that wedge? To me, it's a bull wedge until it breaks. Stop under 30. Over 34, I'm looking for a quick test to 36, and then a much bigger move and takeout potential. All the way up to 50. Very possible there's a lot of room to run, and that's new all-time high territory, I believe. No, it's not. So I'd have to go with high 40s for a target then. Right there. So we pop here, yeah, 48.50. Good looking chart. Don't make sure it doesn't break down though under 30. Got that, Teresa? And Charles again has a question on ASX. Semiconductor. Well, look, any semiconductor in this market is in a bullish group, right? Right. It had a long 1, 2, 3, 4, 5 wave, 1 wave 2. This is wave 3 and 4 is underway. If we get a 5th wave, I would look for 14. 1390, 14 is my target. Charles, when you look at this consolidation in here, you'll see that it's a nice little platform for a move higher. But we also have a little mini triple top and resistance laterally. So let's take another look at this one. Charles, I want you to hear the detail on it. That's key. Today's high was 1160. This high here was 1153. And this one here is 1168. So let's get it above 1165, 68. And then you have left shoulder, head, right shoulder, or cup and handle. This is a bullish chart. And being in a semiconductor group as a secondary stock, it might run, because what happens in major groups that are running, what they say, a rising tide lifts all boats. Well, that includes any strong group as well. So this one, if it pops here, and right today was a good day for it. I'm now looking for 12 3/4 and 14. Those are my targets. So Charles, I hope you got that. Once we have some more time, so please feel free to post anything you'd like. INMD, I like this company. And I've traded this stock a lot, but I don't like the chart. Matter of fact, this is a tech traded swing short, but it was a swing long here, particularly back in 21 when it went through this high. We were long on the breakout in the low 30s, and this baby ran in 99, a triple. It took less than a year, but at 200%. Then a big down move, followed by a base and a potential breakout that failed and rolled over. Well, this is one ugly chart. Let me tell you something. Who asked me that? Robert. So Robert, again, my philosophy has always been buy stocks on uptrends or short stocks and downtrends. Does that look like an uptrend? No. When will it turn? Right there. Take it over 19 3/4 with energy, and then I say go long or move to 21, 23, 26. Until then, this could easily roll over and make even lower lows. You see this channel? What's to prevent this from dying right here and being a $10 stock? Nothing. I know you don't believe it, but it is what it is. BBW. Build-A-Bear. Now that's an ugly chart. Ugly. I have no interest in this stock whatsoever, and let me give you my take. And here's why. Longer term, the only good things I can say about the stock is long term, it's on the long-term uptrend line. Right there. If it breaks down from there, you're looking at a $22 stock. I would wait on this stock. It's in a definitive downtrend, and it hasn't even broken this little tight channel. When I see a stock gap down and do this, it tells me stay away. I want to save you some money. Stay away from the stock until and if it breaks out over 27.5. And even then, what I really want to see is over 29 with volume. Then you're on your way higher. Advanced Micro, who doesn't like this? Me. Now, this was my favorite trading stock because I find that this stock gaps up in the morning, it tends to go in a rising channel. This is a beautiful rising pattern here. Look at this reversal bar. It's a new all-time high and reverses with volume right down here, creating this downtrend over the next 3 months before inverse head and shoulder type, left shoulder, head, right shoulder, breaks out. The problem is no follow through, and today it actually broke down. This is the lowest level in 5 to 6 weeks. I'm not a fan of AMD here, not here. I'm a fan of AMD, but not here. I need to see this over 165 with volume first, then talk to me. Even then, you have resistance at 170, 175 before you can talk about 185. Nah. Of course, someone had to mention DJT, right? Are you short? I hope you're short the stock, Shell. I hope you're short. Why? I mean, it's below everything. It's below support, moving averages in the downtrend. It's now down 7 out of the last 8 days and 10 of the last 11, 12. 10 out of 12 days, the stock's down. It looks terrible. And quite frankly, you may see a test of 32.3 in the next day or two based on this. This is one ugly chart. Now, anytime the stock could turn around and run because it's a popular stock like GME, but not for me, folks. Keep them coming, folks. Please, just post your symbol. INSM. Who doesn't like this chart? Gorgeous. Let's look at long-term first. Here's your rising channel with a target of $100. Yeah, I know. Sounds crazy. $100 is the channel top. Now on the daily chart, anytime you get a breakaway gap that doesn't immediately come down, it usually forms, and this is a rising flag. Very strong momentum. 75, 85, 95, all potential targets. Stop under 53, maybe 55. And I like this chart a lot, and I think it's going to extend. It's a beauty. Speaking of DHI, there it is, a question on DHI. I'm ready to put this on my short list. Robert, left shoulder, head, right shoulder. It's at the neckline, about to break down. If it does, targeting 130, 120, and maybe less. 141 last. If it breaks out of this wedge to the upside, boom chakalaka, you're going to see the stock go to 185, 200. I don't think so, but that's my take. I could be wrong. QYLS. Again, horrible chart. This was a tech trader swing short when it broke through that neckline here from the long coil and then broke the coil. This is a 1, 2, 3. It reached the target at the bottom of the third wave, right there. So if you're looking long, you better be prepared to take profits at 141 and 148. I don't think this has seen a low by any means. And if it breaks here, you have to stop on a 133, 132 actually. On the 132, you can see 122 and even 112. Not a pretty chart. Stay away. Caterpillar. As good as this looked, it's now a bearish stock to me. Beautiful 1, 2, 3, 4, 5 wave Elliott wave type move. And then roll over Beethoven. And this is I wouldn't call it head and shoulders, but it does look toppy to me. Now there is some support in here across the pullback lows and there. So I would say careful on this one. What you want to do is wait till it breaks over 335 and then buy it. But even then, I wouldn't be so sure. I think the stock is precarious, let's put it that way. And potentially you could see it back down to 300 or even 265 again. Charles wants to know about Wolf. Yeah, Petco broke out here. I keep beating myself up for this one because it's, to me, a no-brainer when the stock breaks out like this did and forms a flag, and then it just keeps going. So in that point, 2.5, it went up to 4.5. It's pulling back in a nice gentle manner with good tactical, so I like that. But I would have to stop it under 3. If it goes, potentially this has huge upside potential. My target is 5.5 and 7, longer term. Stop is under 3, like I said. But the pullback was gentle enough, and much like a falling wedge, with good technicals. Look at the on-bounce volume and the green bars in this, indicating to me this is a normal technical retracement within a rising pattern, and could very well be a great trade going forward. Now, on coin, I like CONL, the ETF tracking stock for it. On a long-term basis, you break out of a base, you pull back, and on a long-term basis, 1, 2, 3, 4, 5 waves up. Now, it's possible if crypto stocks continue, we're looking at 350 again. If that's the case, I'd much rather be long CONL, which is the exchange traded fund that's 1.5 times. Watch for this one to get over here, over 85, over 65.5. I would then look for high 70s and mid to high 80s. On CONL, on coin itself, if you can get above that line, you should retest a high, 283, and then we're looking at 3.5, 350. End phase in the solar group. Oh, I look at that quadruple top, and it couldn't get through it and rolled over. This is not good. The whole solar group looks quite weak to me, and I'm not sure exactly why. But trade what you see, not what you think, folks. And I see a breakdown of the trend line, price support, and today's bounce off of 118, closing at 121. Under 118s, I must stop because this stock would be vulnerable to $100. So I do not like this. I would like it much better if it took that zone of resistance out over 140, and then maybe you can see 150, 60 or more. But for now, breakdown, you must act on a breakdown. Mara. I'm not sure why Mara is behind stocks like CLSK and HUT and others, but you can see that the monster 1, 2, 3, 4, 5, wave 1 and 2, and this is wave 3. We're in wave 4. Wave 4 is in a wedge. If we get a major move in crypto, this could be a $50 stock. First targets, however, are 22 3/4, 25, and 30. Anybody else with a question? It doesn't look like it, does it? Well, Qualcomm, let's take a look at that. It's probably the best chart on the NASDAQ 100, or one of them. I mean, there's so many stocks that, like Microsoft, you know, and even Google. And, you know, you can go on and on, but it's a quality NASDAQ 100 stock. Today was a big day for it as it broke out, I think, all-time high. Yep. Key support now 195. But it's so extended that it's met the channel top or close to it. The next day or two, I'd be a seller in the stock. Unless it blows off. Look, if it blows off for sure, every time you see a stock that has that much of a move, say 105 to 225 in about the last 6 months. Dynamite move after it broke out of the base pattern. Friend is your friend, keep playing this and keep raising your stop. Right now, stop on the 205.
Where's Bert?
Excuse me? And then there's the monster of the midway, NVIDIA. Well, everybody likes NVIDIA, including me. I recommended this stock, believe it or not, 4 years ago at 39 before the split. So obviously I like it. And there's no telling where the stock is going. other than to say,
Did-
right now the move is
Did you,
about,
did you
100
find it? Where?
sorry? Thought I heard something. Okay, well, anyway. It looks like we're done for the day. Is that right, David?
Yeah, actually, I had a quick question for you. Do you, this new, I keep hearing stuff about this, supposed new Texas stock exchange. Have you followed that story at all, or do you have any opinion about that?
Did you say Texas?
Yeah, supposedly BlackRock and Citadel are bankrolling this new exchange that's going to be set up in Dallas
I know,
over
but
the next.
what's the purpose of another exchange when you got NASDAQ, New York Stock Exchange? I don't get it. This 7 or 8,000 stocks out there, and then when
Yeah.
it's, it used to be there was the West Coast Stock Exchange here in Los Angeles, right? That went defunct. There was the
Oh, yeah.
Philadelphia Stock Exchange, the Boston Stock Exchange. They're all gone. So,
Yeah, I think the hook is, it's like supposedly lower regulations or cheaper or something like that. But I've heard a lot of references to it over the last week or so, and I'm just wondering if you had any opinion.
it'll definitely be interesting to watch and see what happens there. That's for sure. But folks, I'm a technical analyst. I've been doing this for 50 years. I wrote a book 9 years ago called Profitable Day in Swing Trading on how to read and trade intraday charts and be an extremely profitable trader. Discipline, focus, and preparation are the keys. I want everybody coming into my room for free for 2 weeks. Just sign up and check out what we do here at TimingResearch.com. I think you'll enjoy it. Many people who come in for free trials stay long term. I have people with me over 20 years. For now, this is HB signing off. Bye, everybody. Nice being here, and look forward to seeing you again at Analyze Your Trade. Bye, everybody.
All right, thanks, Ari. Great,
Okay.
great analysis to close off the day for us.
Excellent. Bye-bye.